Welcome everyone to the episode of Back and Forth with Becker Orr. Kevin and I are ready to go. Lots of topics to tackle today, including a lightning round. Those are always fun. You can see the bottom of the screen there. We're going to lead off with Russia, Ukraine. What does that mean for the markets? We're going to tackle that. You want to stick around.
Yes, today is the start of spring edition of Back and Forth, March 1. You'd never be able to know that here with the 4 feet of snow that we're sitting underneath in the cold weather. But otherwise, yes, today we are doing a Back and Forth. And remember, if you want to see more of these, subscribe to our YouTube channel. You can go there. You can get all this content, our financial 15s and everything else as well. If you like us on Facebook or visit our website at beckerorr.com. Plenty of great information there on a whole bunch of variety of different topics and things to look at. But today on a back and forth scenario, we are going to deal with incidents that are going on at the moment, geopolitical. Everybody knows that Russia-Ukraine scenario started. They're worried about whether the markets are something to look at. Clint, why don't you start us off with that, and let's dive into this.
Yeah, we'll pull up a little bit of data here. This is from Ryan Dietrich, LPL Research. He looked at a number of other geopolitical incidents over the years, and you can see it's unfortunately a long list. And then look, the day it really kicked off, like the day there was that military interaction, and then the total drop in the stock market. He also looked at how long it took to hit bottom and then how long it took the markets to recover. And on average, it takes roughly a month or 2-3 weeks for the market to find a bottom after the military incursion. And usually within, in this case, on average, 2 months, you've seen a full recovery. So it's rather short in terms of market impact. And it varies. Some of them are larger than others as far as the drawdown, but on average, you're looking 4%. And so far, the markets have actually been up since we've seen the Russia invade Ukraine. What are your thoughts on this, Kevin?
Yeah, I agree. I mean, I think that the initial reaction from everybody is you see something that either you did expect or maybe it was, we'll wait and see how it plays. And when it actually takes place, fear and panic just seems to kick into the market immediately. Now, over the time frames, as we've seen, as the initial things have gotten on, as we've gotten further on in years, those reactions have been much, much smaller, and they haven't lasted as long because basically, as we've mentioned in videos before, we go back to earnings drive the market going forward, not so much geopolitical incidents. It will have an event. Beforehand, it was military sanctions. Now you're getting economic sanctions, things along those lines. But it is definitely something that we have to concern ourselves with. But again, it's not that it's a fear and panic mode. I don't think that, okay, this incident's here, let's sell everything off, and then we'll wait until it calms down before we start buying back in.
We also have to keep in mind the context. Your markets were already down. It's not as if this was the event and suddenly markets were turbulent. They were turbulent from the start of the year. You had interest rates or the fear of interest rate hikes, which we'll talk about in a moment. You had higher inflation. You had this transition as the central banks were kind of removing some of the stimulus, and ideally the economy was going to open up. And so what does that transition look like? Could be bumpy, and all of that was already weighing on the markets. You already had market turbulence before this geopolitial event. So the S&P 500 was already down, the Canadian market was already down, NASDAQ was down big time in the US, and then this happened. And I think it made things a little worse initially, and I'll pull this up. You can see this is from Bespoke. It shows what happened the morning of February 24th. Now remember, evenings when the news broke that Russia was actually going to be invading Ukraine, the morning it was ugly. Markets opened here in North America. Canadian markets down, U.S. markets down, oil way up, gold way up, oil up because it could mean issues with supply if Russia is involved in a military conflict, and gold is more of a defensive. But then by the end of the day, you had a complete reversal, and that's the right-hand column. The numbers off the bottom there were the exact opposite. So by the end of the day, all the buyers had come in, swooped in, and you had a complete change in the markets. What's your thoughts there, Kevin?
Yeah, if anything, basically what this entire incident did was it caused the market to make a flush. We were already at that point in the U.S. market where we were basically in correction territory, roughly 10% down from the all-time high. And as soon as this opened, everything fell below that 10% level by quite a bit. The buyers started coming back in saying, look, we're in an oversold position. Yes, this is a conflict that's going on, but a lot of people are thinking it may be a relatively short conflict depending on how things go. There's negotiations going on already and things along those lines. So yeah, then we saw the bounce back. People are buying back in. Some people think it's a bounce. I would say that, maybe we're just sort of finding our way at the moment. But yeah, I mean, there was no reason for such a violent overreaction right off the hop. We know that there was things there. We know that sanctions were coming, but we have seen that things have smoothed a little bit more for the markets going forward. Now, that's not to say we won't continue down for a little while. And that may be based on a variety of other things beyond the geopolitical scenario.
Yeah, one of those other things could be interest rates, which
Yes.
are going to be top of mind because we have a few central banks reporting in March. I mean, the Bank of Canada this week, the Federal Reserve in a couple of weeks, both of which are expected to hike. I'll pull this up from CME Group, and it goes through, I won't go through all the background here, but it looks at the futures market, and it tries to use that data to decipher the expectations of traders. What are the probabilities that traders are working in that rates are going to move? Now, this looks at the U.S. The blue line is essentially no rate hike in March, in the March meeting, March 16th. And you can see for a number of months, that was the winner. And then suddenly that changed quite abruptly. The orange line jumps up. That's a quarter of a point hike. So people were widely expecting a quarter point hike. And then there's a brief moment where that dropped, and the green line is the top line, where suddenly everyone thought a 50 basis point hike was a sure thing. And you can see that's since reversed. And now it seems almost a shoo-in that you'll see a quarter point hike by the Federal Reserve on March 16th. So a lot of changes there, Kevin, in the last 6 weeks. What's going on?
Yeah. And again, we had that whole year where basically nothing was going on until about that November time or December timeframe. And I think because a lot of it had always been pitched as this was transient inflation that we were dealing with. And by the time you got to November, December, even early January, the inflation numbers continued to go up and up and up. And we still haven't seen a downward number in over a year. So all of a sudden, it's not just transitory anymore. There's real inflation out there. So we had to start looking at a quarter point for sure. And I think the fact that, the US is around 7, we're around 5, that meant that a half point could easily be coming. I think with this initiative that's going on geopolitically right now, that's taken a lot of that pressure off of the banks to say, okay, we have to go a half point right now. Let's go a quarter. We're not sure how this is all going to play out. And it gives them some sort of a break. So that's why I think you're getting that sort of play down to the quarter at the moment. So yeah, it's something that we have to concern ourselves with. Will it continue on? That's going to be the next debate 6 weeks down the road. Do we go a half point then? Do we go a quarter? Or are we going to go zero? All things that have to be looked at.
Yeah, and expectations have been all over the map. At one point, people were saying, oh, you're going to get 5 or 6 interest rate increases. Then there's only 2 or 3 and everything in between. So there's a possibility in my mind that they end up hiking less than what people think. And that could have an implication for later in the year. But let's cross that one off the list. We need a little bit of time here for a lightning round. I got a whole list of topics. I'm going to throw 3 or 4 of them at you here, Kevin. Then you can throw 3 or 4 at me. And I'm going to start off in the sports arena. You're a Jets fan. I'm a Jets fan. We're getting close to the playoffs. Do Jets make the playoffs?
Oh, I knew that question was going to come. I'm sitting there waiting and waiting. In all the optimism that I have for the Jets and everything that I love to sit there, and I mean, I hate watching them lose more than I like watching them win. No, I do not see us catching that. Too many teams in front of us. Too much of a sporadic play that we've had over the course of the last number of weeks. I mean, I don't think we've strung together more than 3 wins since the beginning of the year. I think that's going to play detrimental. No, I do not see us going to the playoffs, unfortunately.
Yeah, mathematically possible, but probably not going to happen, right? It's a long shot. We just talked about the markets, talked about the intraday inversion we had on February 24th, and we've actually seen a bit of a bounce since then. Was that the bottom? Have the markets bottom from this correction?
I like it. I don't think it is. I honestly think that we will retest slightly lower than that, but I don't think it's got much more to go beyond there. And again, the only reason I'm saying that would be more of a global scenario. I think North American markets are pretty much close to that bottom rate, but I think the European markets being much closer to the geopolitical situation that's going on probably have much more room to fall. So on a global scale, I think there is some more downside beyond what we saw on the 24th. North American, I think we're probably going to retest.
Okay, last one for here, then we'll switch seats. 1 year anniversary, and you might not have celebrated this anniversary, but this time last year, GameStop, meme mania essentially, were everywhere. GameStop, AMC, the list goes on and on. 1 year out there, the air has kind of come out of that balloon. Could we see a repeat of something like that in 2022?
I'm going out on a limb, way out. It's either yes or no, so it's going to be far. No, I don't see it happening. I think the meme stocks were there, and I think that whole Robin Hood experience and the let's get everybody on social media to buy one thing, and we're going to screw over the hedge fund guys on the other. I don't see that happening. It's out there already. I think there's more trigger points. People aren't listening it the same way. So no, I don't see another GameStop happening with a specific stock. It seems to be a one-off, at least as far as I'm concerned.
All right, we'll switch seats here, throw 2 questions my way, and then we'll finish up.
All right. We've already dealt with interest rates. We see that it's bounced all over the map. Now, Do we see before the end of the year in Canada, the United States, a rate hike that's higher than 1%?
Ooh, so you mean the total hike's higher than 1%? I think that's a low probability, but I'm going to say yes. I think we will. That means you'd probably see 4+ quarter point hikes, or maybe they get a 50 basis point hike in there. But yes, I think you can eventually get a total over 1%.
Yep, I probably have to agree with you on that one. I think that's probably where things are. Now, we've done the hockey, and you took away my question from there. So I'm going to give you a sport that I think is something to look at. Baseball and their union have been arguing. Well, not really arguing. They took 3 months off before they even started arguing. Will we see baseball in April?
Ooh, I don't think so. I think we get a season, maybe a shortened season. I don't think we see baseball in April, though. I don't think this gets wrapped up in time.
Ah, nice to know. I can see that being a possibility as well. Finally, I will go with the fact that you live in Manitoba, I live in Manitoba. At present, we have had the 3rd highest snowfall of all time since they started measuring. Does this winter go number 1, or are we going to stay underneath the most snow we've ever had?
I don't think we get to number 1. We're already into March. I like to be optimistic, say the spring's coming, snow's melting. I'm going to say we don't get to number 1.
Yeah, I'd love to say that too, but I keep shoveling every 3rd day. So we'll have to wait and see if we get through March, assuming the weather doesn't warm up. Nope, that's perfect. Those are all the questions that I have for today. If you want to deal with anything else, questions on back and forth, things you'd like us to ask each other, anything else that you've got on the financial market, please visit our website. Please go to chatwithclintonandkevin.com. We're more than happy to answer any of those questions on almost any topic that we can think of. Other than that, I think this is another back and forth that's been successful. Final words go to you, Clint.
I think we covered it all. Everyone stay safe, take care. We'll be back again soon with another video.